Hello friend, good evening. When an investor is looking for investment or putting money in various instruments, he is looking for a good return and safety of funds. As you know, every retail investor, that means an individual person, has to choose among the various options for investment of surplus fund. It could be bank deposits, it could be bonds issued by the private companies, or it could be the bonds issued by the central government, that is the government of India, or the various state governments like Maharashtra, Tamil Nadu, Uttar Pradesh, Haryana, so on and so forth, right? So, with a view to attract the retail investors towards the government securities, the Reserve Bank of India has come out with the RBI Retail Direct Account Scheme. What is this RBI Retail Direct Scheme? Let us discuss in this video about the scheme. As I said, with a view to attract the retail investors, or rather I will say that to provide them an opportunity to participate in the government borrowing program, RBI has activated the Retail Direct Scheme on 12th of November 2021. Earlier, the HNIs, that is high net worth individuals, they used to invest in the government securities, but through the private banks by buying the securities through brokers or through the this asset management companies. But now, with this introduction, the RBI has brought this market at the doorstep of the retail investor, and that is the pure intention of the RBI, that an individual should have the various options to invest his money at the minimal cost. And the platform which is developed by the RBI offers an opportunity for retail investor to invest in government securities directly without going through the bank or through the broker. But then when we are talking about the government securities and government securities, what are government securities actually? We do hear, but very few of us are having a adequate knowledge about the various forms of the government security. First of all, why government issues the securities, right? So, in order to bridge the fiscal deficit, the government is required to issue the securities for different periods. What is this securities? They are nothing but the raising the loans from the market. In a simple language, if I say, it is like a raising the loan from the open markets by issuing the promissory note, that is a called a government bonds. Okay. And what is the fiscal deficit? In a plain language, if I say, it is a difference between the total my income and expenditure. If I have an income of say 100 rupees, and if I am going to spend 110 rupees in next financial year, as shown in the budget, we always hear the word deficit. That means I have the 10 rupees deficit. So where from I will bring this? That means I have to raise the loan of this 10 rupees from the outside. Okay, exactly the same principle is applicable to government borrowing. When the government is planning to spend more than its income, the government will fill this gap by issuing the bonds in the market. We call it a government securities or the bond or gilt. The nomenclatures are different, but the instrument remains the same. Then when we say this instrument is there, it should be tradable, right? So it is like a first primary market and secondary market, exactly what we see in the share market. Share market में क्या होता है? If some company wants to raise the capital from the market, it will come with the IPO. If it is for first time, it will come with the IPO. We call it a initial public offering. Till that time, the shares of the company are not listed. Okay, so they are privately held shares. But once the company comes with the IPO, they are available for the general public for investment, right? Similarly, when the government issues a bond for the first time, okay, it comes with the prevailing interest rate, that is called, it is a promissory note. This bond is nothing but the promissory note in Demat form. Like what we get the shares in the Demat form, like we see Bajaj Finance, we get only entry in our Demat account that Bajaj Finance 100 shares are credited. Exactly in the same nature, these securities are also appearing in the Demat form. So if when the first time they are issued, that is called a primary market, and after that bonds are issued, they are very easily and they are very popularly traded in the other market. When one bank buys from the other banks, or investment companies, or from the insurance companies, there are a number of players in the market who buy and sell the securities, like what we see on the stock market, right? So same similar platforms are available for purchase and sale of the government securities. So if the government securities is sold at 7% when at the time of issues, and down the line the rate of interest in the market comes to the say 6.75, that means the 7% security, which means that means the 7% interest rate becomes very attractive, and people are ready to pay premium for buying this security. That is why this 1 lakh security will fetch an amount which is more than 1 lakh. Oh, for example, hypothetically you can take say 1 lakh 1000 and so on. So there is a one market that is called a primary market when the RBI issues the security, and the other market is a secondary market where the government securities are purchased and sold. When we say government securities, it is a term is very broad terms. So, and when we are planning to invest in the government securities, we must know at least a broad idea about what are the different types of government securities available in the market. Like when we go to the bank, we inquire about the term deposits. We have various types of term deposits, no, like a MIDS, monthly interest deposit scheme, or QIDS, quarterly interest deposit scheme. Or if we want to invest in installments, we go for the recurring deposit scheme. Or if we want to go for a longer durations and we don't want money periodically, cash flows periodically, then we go for a cumulative deposit scheme, so that we can get the interest amount at the time of maturities, right? So those will be for various period, starting from the saving account where we can withdraw any time, to the fixed deposit where we keep the money for a longer horizon, longer duration. Similarly, government also securities are also issued by the governments, and that is popularly known as a GSEC or gilt, right? These securities could be on behalf of the central government or the various state governments, right? And all those issuance and repayment and debt servicing program or interest payment is done by the Reserve Bank of India. These government securities are regarded as the safest form of government investment, since they are backed by sovereign guarantee. Since they are issued by the government, there is hardly doubt about the repayment of the these securities on due date. So absolutely there is no, even for the state government, there is no instances where the payment was delayed or there is a default. So it is, we can take it that it is a zero risk, and that is why it is a very attractive from the credit risk point of view. As I said, on the lines of the various deposit scheme offered by the bank, the government also needs to issue these various instruments as per the requirement of the government, because their requirement also vary from, that is the cash flow will vary from short term to longer term. Sometimes the government requires funds for a very short time to manage its liquidity. Sometimes it goes for the medium term. Sometimes it goes for a longer duration, like even 40 years also. Okay. So there are two types of securities. One is short term securities. Short term securities also known as a treasury bills. The treasury bills are short for term instruments which are known as a T-bills. They are issued for 3 tenors, 91 days, 182 days and 364 days, right? There are another form of short term instrument which is known as a cash management bill, which is a very similar to the treasury bills. Only difference is that it is issued for less than 91 days. These are discounted instruments. Discounted in the sense means, if the instrument is for 100 rupees, upfront, and suppose there is a that is issued for 364 days, that is a 1 year, and if it is issued at a, say 5% rate of interest, the government will take only 95 rupees at the time of issuance. No interest will be paid up for the intervening period, but at the time of maturity, the government will reimburse 100 rupees. So it is upfront recovery of interest. Okay, this is called a discounted instrument. Then another form of securities are long duration securities, where the governments are issuing such securities for a longer tenure ranging from 5 to 40 years. This is normally issued by the government of India. We call it central government. Then there is another form of government securities which are available in the market, that is called a SDL, state development loans. These are issued by the various state governments and they are known in the market as SDLs. Okay. In case of longer duration, it means that when the security is maturing for more than 1 year, there is a periodic interest payment by the central and state government. Generally, the interest is paid every half year. Okay, and the face value, that is, say, if we buy say 100 rupees security, the payment and at a 7%, the government will pay 7% every half year to the credit to the account of the person who is holding that security on that day, like a record date, what we call in the share market. And at the time of maturity, the government will repay the basic face value 100 rupees plus the interest for the remaining half year, right? This is called a long duration securities. This platform also provides for purchase and sale of the sovereign gold bonds. Okay, so it's only not only government securities, also one can invest in the sovereign gold bond through this platform. Now the question is, where if I am an investor, I want to say invest 1 lakh rupees, where I can go and buy these government securities, right? Exactly for this purpose, RBI has made the things very, very clear. A number of things, government securities can be bought or sold through these platforms. When RBI auctions or issues the fresh government securities, they are also available for purchasing on this platform, right? As a retail investor, normally when such auctions are conducted, the players are required to bid for those securities, quoting at what price or yield they are ready to purchase. But for retail investor, RBI says that there is no need for bidding, because this retail investor will not have that knowledge and competence to bid in competition with the other big players in the market. So RBI has kept a 5% quota for the retail investors. Okay, and as I said, once the securities are issued, then they are available in the secondary market, where I can go and sell or purchase those securities like what I do in the stock market, right? Suppose I want to buy shares of Reliance, I can go to my broker and ask for the Reliance shares. Similarly, whenever I want to sell those shares, I can sell those shares through the stock exchange like BSE or NSE. Similarly, there is a platform called the NDS Home. We will see that for purchase and sale of the securities, right? So this RBI has this platform which provide direct gilt account. That is, what is the direct gilt account? Don't get confused by the name. This direct gilt account is nothing but the Demat account which is opened by the RBI for this crediting or debiting the government securities. So it is like we have a Demat account with NSDL or CDSL. Similar account, this Demat account is available opened through this platform with the Reserve Bank of India. Along with this Demat account, normally what happens here, we are having a Demat account with NSDL or CDSL, but we are having a trading platform with some broker. But RBI has integrated this here beautifully, and on one platform, both this retail direct gilt account, that is Demat account, as also trading platform is provided, and there is a linkage to bank account. Once when we open this account, the bank account can be linked to this platform, and this is how RBI retail direct account works, right? It's a beautiful platform provided by the Reserve Bank of India, providing access to both primary and secondary market. So as I said, when RBI first time issue the security, that is through RBI Retail Direct. So if I want to go and purchase directly from RBI for the first time, for the first issuance rather, I will say, I have to go and submit my request here. Again, as I said, there is no need for bidding here. I will get the email from the RBI that on so and so date RBI is going to conduct the auctions. I can go and put my request there and transfer the funds from my bank account to this account, which is managed by the CCL, that is Clearing Corporation of India, right? Once the request is put, when the auction happens, the request is accepted and the government security is credited to my Demat account. Okay, if there is something remaining balance, that is refunded by the CCL to my bank account. So this is a primary market, just like I just explained, like a IPO. Here I can participate directly through this platform. And here the beautiful thing is that the lot size RBI has kept as low as 10,000, because if for other wholesale players, normally by banks, insurance companies and corporates, normally there is a lot size is 5 crores for purchase or sale of securities. But here, since this platform is specifically designed for the retail investor, RBI has kept the lot size as minimum as rupees 10,000. So even if I have only rupees 10,000 to invest, I can still go for the government securities. Okay, and just keep updated for every investor, retail investor. RBI keeps sending the mails whenever the auction is conducted. And as I said, 5% amount is earmarked for the non-bidding retail customers. So I don't need to bid for such auction. I have to only put my request that I want to purchase, say, government security of 20,000. That's all. And this security name and everything is available on the platform. This account can be directly opened through online. There is no need to go anywhere. You can put the request, and there is a set of document which we will discuss. You have to keep it ready. The RBI people are very helpful. They are guiding even for retail investor as to how to open the account. They will conduct the KYC also online, and accordingly this account is open. So from sitting at home, one can open this RBI Retail Direct account. There is no need to go to any bank or anywhere else. Okay, so that was for the direct primary issuance. Then there is, as we discussed, there is another market called a secondary market, where one bank can sell to another, or one retail person can sell to other retail person. A can sell to B, B can sell to A, C can sell to D, D can sell to A, or vice versa, depending on requirement of buyer and seller. So it is a pre-market for the members who are available on this platform. Okay, so this is a practically trading platforms. What we do for share market, exactly same thing is done here. This platform can be used even for trading also, because as price fluctuates in case of shares, price do fluctuates in case of this bonds also, government securities also, depending upon demand and supply and changes in the interest rate scenario. Because interest rate, actually RBI, if you say repo doesn't change every day, then somebody will ask why there should be change in the prices of the security. Okay, repo is changed very periodically at quite a so you can say stable intervals, but market expectation changes every minute. So there will be supply, there will be demand, so that will keep the price fluctuating, and that will also provide the opportunities for the traders to buy and sell the securities in this market also. Okay, since the lot size is, as I said, it's only 10,000 rupees, it is very easy for a layman to trade even with a small amount at its disposal. So if somebody wants to open the retail direct account, it's a very easy. What is the requirement? As I said, one must have the rupee saving account with any bank, and most of the banks have got this linkage with the RBI Retail Direct. But only please check whether your bank is on the list of the RBI who are having the linkage with this RBI Retail Direct. All the major banks have the linkage, so there no need for to worry about that, right? Then of course PAN number is required, along with keep the PAN card ready, and any OVD, official valid document. It could be Aadhaar card, it could be passport, or it could be driving license, so that RBI can conduct the KYC for this purpose. One needs to have a valid email ID for opening the account, so that RBI keeps the retail investor informed about the incoming these auctions of the government securities, and if any other communication is required to be sent, RBI will send it through email for a faster communication, right? And of course registered a mobile number. That is very these are the only requirements for opening the RBI Retail Direct account. Even a non-resident retail investor is also eligible to invest in government securities as permitted under the FEMA. Okay. The Retail Direct Gilt account, or that is what we describe as a Demat account, can be opened singly or jointly with another retail investor who meets the eligibility criteria. If you are opening in a joint name, it goes without saying that you need to keep this PAN number and OVD, or officially valid document, for both ready. So both should have the email account, both should have separate phone numbers, and the document should be kept ready for both the joint account holders. The beauty of the platform is that if you go and buy this government security from other platforms or brokers, they will definitely have a charges for that. Nobody will do without charges. But here RBI, they don't charge a single paisa as of now for undertaking this transaction, because they are promoting this and they are making it easily available to the retail investor. No charges are levied by the RBI for undertaking these transactions. It is, as of now, it is a free of charges, right? So when we say that government securities, we always have in mind whether I should go it for the government securities or for bank deposit. Let us have a quick comparison. Credit risk, for bank deposit insurance is available to the extent of 5 lakh rupees only. Where in case of government security, there is no need for insurance. As I said, these are having the sovereign backing. So it is a fully secured. If the bank goes into liquidation, a individual customer can claim deposit from the DICGC to the extent of 5 lakh only. But here you can put this, whatever amount you have in the government securities, they are fully secured. There is no credit risk, or there is no possibility of default in case of government securities. In interest, yes, bank FDs, the bank pays the interest at the contractual rate. Once you put the deposit, say deposit of 1 lakh for 5 years at say 7%, bank is going to continue to pay interest at 7% for the 5 years. Okay. Of course, the choice is with the depositor to get it monthly, quarterly, or yearly, or at the time of maturity. If we opt for anything less than this monthly or quarterly, it is definitely going to be at the discounted rate. Here in case of government securities, interest is only one maturity is this cash flow is there, that is a 6 month. So interest is earned at coupon rate. Coupon rate means like a bank deposit 7%, when the security is issued at 7%, that rate of interest is called a coupon rate. So that RBI will pay interest at that rate every 6 months to the credit of our bank account, and at the time of issuance, face value plus any unpaid interest for the broken period or for the remaining period will be credited to our account. In case of deposit, they are not a trade instrument. So one cannot, suppose I keep a deposit say 1 lakh with Bank of Maharashtra, I cannot sell that deposit to other, even if there is a requirement for liquidity for me. And if there is a, suppose I keep a deposit of say at 7%, and tomorrow rate of interest is going to goes down to 6%, still I cannot make any profit out of that. Okay, because that is not a traded instrument. Where in case of government securities, when I can easily sell those instruments in the NDS home market, if there is a the lower market rate is lower than what the investment rate is, I will get the appreciation. Suppose I have bought a security, say of 1 lakh rupees, say at 7%, and after say that is for 5 years, and say after 1 year I need the money, and at the time the market rate is 6.75%. I can go to the NDS home and sell that security at 6.75%. There I will get some premium, say 1000 rupees. So my gain will be interest up to that period at the contractual rate only, that is at 7% plus capital gain, okay, of say 1000 rupees. So here I will not lose any for premature payment, but in case of bank deposits definitely there will be premature penalty, okay. But liquidity, bank deposits are easier to operate. I can go to my branch at any time, and nowadays on the platform only I can open EFD. I can get the premature payment at any point of time. Of course, as per the bank's rules, some penalty will be there depending on the rules framed by each of the bank. In case of government security, yes, there could be some issue because since this is a limited market, as of now liquidity is definitely limited. So if there is a buyer, I can sell the government securities, but if there is no buyer for that security at particular moment, then probably there could be some problem for the liquidity. Of course, banks are also giving loans against the government securities as they give for the bank deposits. But if you ask me about the liquidity, as of now India's home market provides limited liquidity. So what I need to understand before I start investing in government of India or state government securities, I should know this basic term, that is what is a coupon. Coupon is nothing but the interest rate which is carried by that security. This interest rate is decided at the time of issuance of the security. Then current yield. Current yield means the market going current market rate, okay, current market interest rate. It's so to make the things easy. Holding the yield means at the rate where when I purchase the security. It is possible that one security that is issued 5 years back, that was issued at the say rate of interest of 7.5%. So coupon will be 7.5%. But when I purchased that security, the interest rate was at 7%. So for me that holding yield will be 7%. But now current market rate is 7.25%. So current yield is 7.25%. So these are the different terminologies I need to understand. Then what is the relation between yield and price? Okay, when yield comes down, the price goes up. That is the inverse relations between the yield and price. I need to understand something about this. Then we should also know what is the clean price and dirty price. Okay, clean price is the price which is seen on the platform, that is 100 rupees securities traded at 96 rupees. So I say 96 rupees is a clean price. But when there is a broken period interest of 2 rupees, and if I add up this 2 rupees to 96, that 98 becomes the dirty price. Okay, interest accrued concept we need to understand. So friends, just to ensure that the video doesn't become too lengthy, I have just briefed about this concept. I am planning to have a separate video on this very beautiful concepts of coupon, yield and all those things. I would request you to please subscribe to my channel and wait for the next video on this. Thank you so much. Yeah, have a happy investing.